Hi there, it's Mike Kramer of Mach Capital. Today is Tuesday, August 27th, and it's around 5 p.m. New York time. Economic data is really going to take a breather tomorrow, Wednesday, August 28th. Although in the afternoon we will be getting Nvidia's results. Those are obviously highly anticipated, and the outcome of those results are likely to have also a big impact on where the markets go on Thursday this week. On Thursday, we're going to be getting GDP. This is going to be the second quarter revision. We're looking for 2.8%. Also on Thursday, we're going to be getting initial jobless claims. Again, these are very important numbers given the market is concerned about the unemployment rate, where the labor market is, and whether the economy is softening. Pending home sales, and then we're going to finish the month off with a PCE report. We're looking for 0.2% month over month versus 0.1%. Year over year, we're looking for 2.6%, down from 2.5%. Month over month core, we're looking for 0.2%, in line with last month. 2.7% on year over year, up from 2.6%. Obviously, given the events at Jackson Hole and the indication the Fed is likely to start cutting rates, the labor market is going to start taking much more precedent over the inflation data unless we really start seeing inflation start picking up. But a lot of the indicators I'm seeing suggests that really the importance here is on the labor market. And really, one of the easiest ways you can keep track of what's happening in terms of what the market is thinking about with the labor market is simply by watching the 10-2 curve inversion. Over time, the unemployment rate tends to track the yield curve very closely. So if we continue to see the yield curve moving higher, it's probably going to be because the bond market is anticipating a higher unemployment rate. And that's really going to tell you a lot about the health of the U.S. economy overall. And this is one of the reasons why we've been seeing so much weakness in the U.S. dollar of late. You can see the U.S. dollar, the DXY index, actually closed today below this 100.88 level. It didn't breach yet the 99.70 level yet. But again, if we were to breach this level, which is beginning to look more and more likely, we could see the dollar index drop back into this 97 area in here. Again, this is a very important level. We've clearly broken now what is held as support on several occasions, going all the way back to February of 23. So it's a pretty meaningful break at this point. Also trading well below the 200-day moving average. The one thing I will point out, though, on the dollar index is that you are trading towards the lower end of the Bollinger Band, and you are seeing the RSI already scraping below 30. So it's not to say that the dollar can't continue to go down over the longer term, but it is looking like potentially at this point we are getting to some sort of area where, again, you could see some consolidation, at least based off of some of the immediate technicals. When you look at the euro versus the dollar, it's the same thing. We're basically now at a level where we've broken multiple levels of resistance. From an RSI and a Bollinger Band perspective, still overbought, but not quite as badly. We've certainly seen the market consolidate a little bit over the last couple of days. I think the last time we spoke, it was around here. So we've seen it move up, but more importantly, it's been a very slow move up, and that's allowed it to move back inside of the Bollinger Band, taking some of that pressure off that overbought condition. When we look, we're still working towards potentially getting up to around this 112.5 region. That doesn't seem to have changed at this point. When we look at the pound is clearly broken out. Again, last time we spoke was Wednesday last week. We were looking at the pound around the 130 level. We've now gotten up to resistance around this 132 level we were talking about. You can also see that the pound is overbought at this point. RSI at 76, trading at the upper Bollinger Band. You are at resistance. It would make sense to see the pound consolidate a little bit around this 132.60 area. The next major level of resistance probably doesn't come until around 134. You can see that this has served as resistance in the past and also support. So that's something you can keep an eye out for. US dollar, Japanese yen. This continues to show signs of strengthening for the yen at least. This is a pretty big level, it looks like, at this point. You can see that we've been sort of testing this 143.5 area now on a couple of occasions. Again, last time we spoke was on the 21st. We were looking for the yen to move lower. That's pretty much happened. At this point, it's pretty tough to say that the yen is that the dollar yen is oversold from that technical perspective. RSI certainly only a around 30, and we are in the middle of the trading range. Basically, it looks like we got back to the 20-day moving average that served as resistance, and now we're just kind of grinding below it. If we were to see this dollar yen break this 143 level, which is clearly an important demarcation, that would probably set up a retest of this low in August. And more importantly, it could really set up a break of that low and potentially set up a decline to this 140.60 region. I'd be watching this area pretty carefully because it looks like, there's an opportunity for the market to set up a double bottom here and at least try to push and take out this high around 148. I think a lot of that's going to depend on things like what the GDP data looks like this week, what does the initial jobless claims look like this week, and more importantly, what does PCE come in at? If we were to see initial claims rise, if we were to see PCE come in light, those are the two big ones. You would certainly, I think, see dollar yen move even lower. If we take a look at oil, just because I think this is particularly interesting, especially given the fact that we're seeing a weaker dollar play out. We've seen basically oil move sideways now for a really long period of time. And what's particularly interesting right now about oil is that we're getting to this area where we're sort of bouncing around at this uptrend. Clearly, oil is not in a position where it is oversold by any means, and it could certainly go lower. Right now, we're still finding support around this $70 to $72 a barrel region. It also looks like there is clearly downward momentum in oil prices, and so I would be watching for a break of this low at 71.80, setting up a retest of this 67.50 area at some point in the not too distant future. I think there's a good shot that that's going to happen sooner than later, and this is another potential indicator that the global economy is starting to show signs of slowing down, and it is particularly interesting since you are seeing the dollar weakening. When we look at gold, we talked about this last week about it breaking out, moving higher. You can see now there's a clear uptrend with some resistance in it. This certainly seems like an area where you could see gold maybe consolidate a little bit. We aren't really technically overbought, but again, you can see that there's a clear uptrend in place. Overall, I think gold can still continue to go higher. It looks to me like we broke out of a meaningful period of consolidation that was taking place in this region here, and that appears to now have been broken, and that is probably going to continue to lead to even higher prices in the future. The DAX is certainly an interesting index to keep track of just because it seems like the economic data coming out of Germany hasn't really been all that strong. The earnings revisions that I've seen in the DAX haven't really been that great looking. But yet the index goes higher, and it's a bit of a mystery from at least a fundamental perspective why the index continues to do so well. You can see we are hitting up against some resistance at this point, at least from a Bollinger Band perspective. Still plenty of room to go to around 18,925 or so. Again, right now you still have upside potential to all the way up to 18,875. Again, the way it trades, it's a little bit surprising to see it so strong. But again, right now we have basically come back to this big resistance level. Gap higher tomorrow leads to breakout. 1875 is your next stop. If you were to stop here and reverse, I would be looking for gap fills in these regions here at around 18.1 and 17.9. The FTSE's also been performing a little bit better, but also notice the FTSE got to another area of resistance, and that's where it stalled. I think, again, last week we were talking about it potentially getting back up here. We're not really seeing it break down either. There was certainly that opportunity for it to happen, and it didn't. As we know, the FTSE was following copper for a really long time. Then they deviated, and it looks like they're starting to follow each other once again. So, again, I would keep an eye on copper. I would see if copper continues to move higher as well. That's going to be your signal. I think that the FTSE goes higher and potentially moves up to this area of resistance around 84.50 or so. When we move over to the NASDAQ, last Thursday we had a bearish engulfing pattern. I know a lot of people have sort of ignored this, but I'm going to point out that we had a bearish engulfing pattern on this Thursday. This was a Thursday, July 11th, with a bearish engulfing pattern. Bearish engulfing pattern on Thursday. Here's another Thursday, bearish engulfing pattern. And so what you're seeing is this pattern, bearish engulfing pattern on Thursdays, seem to be popular days for bearish engulfing patterns in the marketplace. And really, you could go all the way back to the summer of last year to start really finding some of these bearish engulfing patterns and when they really started to begin. But the point being is that if you notice, following these bearish engulfing patterns on Thursdays, you tend to get rallies on Fridays. You'll sometimes see some follow through on Tuesday, Monday and Tuesday, and then Wednesday tends to be a weekday. Here you can see bearish engulfing pattern Friday, Tuesday, Wednesday. I guess we had a holiday in here. Market moved up and then moved down. Here you go, bearish engulfing pattern down right away. Bearish engulfing pattern up, 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 down. Here you go again, bearish engulfing pattern up day on Friday, down day on Monday, up day on Tuesday. So what I'm saying here is that we have this pattern. It typically occurs on Thursdays, and usually on Wednesdays is when we really find out if there was any real meaning behind it or not, because it just seems like after that Wednesday, we've had some pretty big moves in the market the following days. Now, obviously, Nvidia reports results, but that doesn't come out till Wednesday night after the close. So will be interesting to see what happens tomorrow. One thing to consider, I guess, and to throw out there is that if the market is very nervous about Nvidia, you could see implied volatility really rise for the entire market complex. And you could see it probably notated in the VIX one day. I'd be watching this very, very closely tomorrow. If it starts moving up rapidly, you could see a sell-off in the market as implied volatility rises throughout the day, something to just keep an eye on. Again, this is the S&P 500, also a bearish engulfing day. We've seen this before. Here it is on Thursday. Here it is, another one on the Thursday. Here's another one on a Thursday. Here's another one on a Thursday, and again, usually on Friday, up days. So, and in this case, we even had an up day into two. We actually went out and took out the highs on the Tuesday and then started to move lower. So, again, there's something to this pattern happening with a bearish engulfing patterns on Thursdays, followed by recovery days, Monday and Tuesday, Friday, Monday, and Tuesday, and then you get some major move on a Wednesday. So, again, something to keep an eye on. There's obviously plenty of gaps to fill to the downside in this. We've certainly have been consolidating sideways now for a number of days. It looks like you can draw a line across the tops. It looks like you can draw a line to the bottoms. It looks like you can draw these lines here. So again, if we just connect the dots, again, this has been a big consolidation pattern over the last several days. And again, something you'll want to watch for tomorrow, whether or not we get implied volatility moving up into an Nvidia and whether that leads to a market decline as everyone waits for the results. The Dow Jones Industrial actually made a new high today, but managed to not really close above the previous all-time high in terms of the intraday price. So again, it looks like at this point, this area in here, around this 41,400 area is your resistance level. So we'll need to break above that before we can really start thinking about what the type of upside there is. Here's your uptrend in the Dow as well. It goes all the way back to the bottom. And so you'll want to watch, because if you break this downtrend, call it around 41,200 or so, 41,100. If you break it in this range, you open the door to this gap here, and then, of course, you open the door to this gap over here. So a lot of stuff going on in the market the next couple of days. I hope you found this helpful. Until next week, have a good one. Bye.